And Southeast Asia's biggest lender, DBS, has reported better than expected second quarter earnings. Net profit rose 17% to touch 1.6 billion Singapore dollars, and that's even amid heightened economic uncertainty. Higher income from its key businesses such as lending, wealth management and trading helped lift the bank's bottom line.
DBS delivered a strong quarter despite rising economic uncertainty. The bank sustained its previous quarter's record performance with a strong showing in loan growth, record fee income and recovery in trading income. This even as Singapore's economic growth has eased to its slowest in 10 years.
40% of the bank is not in Singapore, and even the Singapore business, when we talk Singapore business, we follow our customers outside Singapore. Therefore, the Singapore GDP aggregates don't necessarily reflect on our total business. Some portions do, but a large part of our business is actively diversified. So we're not tightly coupled to Singapore's growth data and growth numbers directly.
Net interest income rose 9% on year to 2.4 billion Singapore dollars. Net interest margin, a gauge of profitability, was 6 basis points higher than last year at 1.91%. While housing loans continued to drop, they are picking up after 3 quarters of subdued growth due to the government's property cooling measures. For the full year, Mr. Gupta expects revenue growth to slow.
In a declining interest rate environment and in a slower world, we won't be able to sustain double-digit top-line growth. And so you have to assume that our top-line growth will fall from 10-12% to half that.
Analysts expect that banks will face more challenges ahead, with interest rates expected to decline and economic growth easing.
With the potential Fed rate cut coming up and maybe 1 or 2 Fed rate cuts this year, this might actually affect the bank's net interest margins as well as potential changes in the guidance for the full year. So right now there's a 5 basis points guidance for full year expansion of net interest margins. So if the Fed were to cut more than 25 basis points each time, it's very highly likely that the banks will lower the full year from 5 basis points to maybe 3 to 4 basis points.
Mr. Gupta said that every 25 basis point cut by the Fed would lower DBS's net interest margin by 1 or 2 basis points. DBS is the first among Singapore's 3 banks to report its second quarter earnings results. It'll be followed by UOB and OCBC on Friday, the 2nd of August.
And still on DBS, it says it's confident in competing against new virtual banks entering the market. Mr. Gupta's comment follows the announcement by Singapore regulators that it will be taking applications for such banks next month. Virtual banks are in the spotlight after Hong Kong opened its doors to such banks in March.
What the regulators are very keen on ensuring is that this industry does not go the way of e-commerce, where people endlessly burn money with no profitability objective in sight. I drive monopolistic behavior with no profitability objective in sight. So to our mind, as long as new competitors have an objective of having to make acceptable return on equity, we think we can competitively hold up against them. Because the only way you can actually start distorting pricing in the market is if you're not bothered about making money.
Mr. Gupta also said DBS is looking to refresh its digital bank offerings in Hong Kong, as regulators there have issued at least 8 new virtual banking licenses this year. He added that DBS may expand its digital banking services to Taiwan and Vietnam.